The purpose of the asset manager is to provide investment, structuring and strategic advice to the JV entity in respect of the asset pool. This will include looking at letting strategy to make sure that the best possible quality of tenants and quality of leases is attracted to the asset portfolio. The role of the asset manager can be contrasted to the role of the property manager. The property manager is there to make sure that the property is looked after at a much more asset-specific level. So if we take, for example, a shopping centre, the role of the property manager would be to make sure that the common areas are looked after, that all the necessary contracts, for example, in respect of cleaning services or janitorial services, are entered into. And the property manager may also liaise on a day-to-day basis as regards the needs of the tenants. The property manager will not, in the way that the asset manager does, be concerned with the strategic performance of the asset portfolio. In terms of the fees that an asset manager can typically expect, they can expect an acquisition or a structuring fee for bringing the asset portfolio to the JV entity in the first place. They can secondly expect a periodic or an annual asset management fee in return for the structuring and strategic services that they're providing. Thirdly, and perhaps most importantly, in order to reward successful performance, the asset manager can expect to receive a promote fee, which is based on the internal rate of return of the JV vehicle. Fourthly, they may expect a leasing fee for tenants produced to the asset portfolio. Fifthly, they can expect a construction or a development monitoring fee if there's an element of capital expenditure or development across the asset portfolio. And sixthly, when assets are sold or when the JV is exited, they can also expect an exit fee for the services they have provided. As regards termination, the capital provider will be keen to know that if the asset manager fails to perform, it can look to terminate the asset manager. And there will often be a series of key performance indicators such that the underperformance of the asset manager means that the joint venture vehicle will have the right to terminate the asset manager. Also, the capital provider may be very keen to know that if there's particular key people that are involved with the running of the asset management business and involved with the strategic advice provided to the asset pool, that should those key people leave, key men they're often known as, then at that point, the joint venture entity would be able to terminate the asset manager. Likewise, if the asset manager is insolvent or it's in material breach of its obligations, at that point, there would look to be a termination right. If the asset manager was to undergo a change of control at the structuring level, then not only would this present a termination right for the investor, but typically the debt finance provider under the debt documents would look to be expecting to be able to terminate the asset management arrangements at that point too. Finally, if there's a cross default under the joint venture agreement, such that if there's a breach of the joint venture agreement or the shareholders agreement, then typically there should be a right for the investment provider to terminate the asset management arrangements in that case too. Other important terms within the asset management agreement include the business plan and the asset manager's obligation to implement the business plan and to assist in drawing up the business plan and getting the debt provider's consent to the business plan. Likewise, if the asset manager wishes to subcontract its duties, this may be permitted under the asset management agreement, but typically only if the asset manager retains responsibility for the performance of the subcontractors. It would be quite common for mutual indemnities to appear in an asset management agreement. This would mean that the asset manager would expect to be indemnified for performing the services it's obliged to provide under the terms of the asset management agreement, and likewise, the capital provider or the JV entity would expect to be indemnified if the asset manager was to breach its obligations under the asset management agreement.